Joining me now to help me out with all this chaos is, of course, the one and only Chris Pulver. Let me bring him in and say hello. Hey, Chris.
Good morning, Nick. How you doing? What's happening? Official shutdown. Futures market was a little crazy overnight, but we've pulled back about 50% of what we sold off immediately at the open yesterday. So today will be interesting to say the least. ADP numbers came out, right? ADP numbers were negative this morning, but non-farm is a big question mark.
Yeah, that's a big question mark because you're wondering, okay, are we going to get the NFP report? But yeah, Chris, that was a factor of 80,000 jobs. I noticed that. We expected 52,000 jobs. We ended up losing. We went negative. That is a swing of 80,000 in the negative direction.
And a revision from 54 down to -3.
So what is that? So that brings us up to 100 and something thousand jobs swing in a single day. So that is pretty substantial, actually.
Who's responsible? Fire that person. Let's fire that person.
New person. I don't like the data. Chris, what are your last time we spoke, we were talking about looking for dips in the indices, looking for opportunities to find ways to get long creatively. How are you playing things this week? Are you in a lot of trades? Are you still cash heavy? What are your thoughts?
It's about the same as far as cash position. I have thrown a couple more trades in this week. I threw a trade in yesterday. DraftKings was a trade that I posted. Pfizer, a trade that I posted. I put in before XOP, XLU, XLE. So the trades that I'm taking are not necessarily high flyer, tech stocks. They're not chasing AI. I almost wonder, how big, how strong, how powerful Mag 7 stocks are. Are we completely divorced from the actual real market? I mean, I almost think that they're so big, they're so powerful. If the market just refuses to let them fall, if they just remain automatically bid, I do wonder if the steady performance of Mag 7 is enough just to keep the entire market resilient. Because right now it's like we're seeing numbers across the board between like the U.S. Misery Index and the labor market, and all these concerns about, well, if this data was coming, it'd be a recession, and we're seeing recessionary type data, but yet the markets are not budging. And it's one of those situations where is the economy going to have to show us for real that it's in a recession, and then the market actually pays attention and earnings are revised. One thing I wanted to also point out that's happening right now is there is a pretty solid blackout window where there's no buybacks. So this kind of propped up stock market with buybacks is gone for at least the next, I think 15 or 20 days before we kick off again. So that may not seem like a lot, but I think to me that is enough to look at a possible correction into the 21 period moving average. Again, I keep going back to these same numbers. So the 21 period that I have in my daily, this is an exponential moving average. We're looking to open up a little bit lower, so 0.45 on futures to the downside, which would bring the SPY down to maybe like 661-ish. And same thing down to the SPX, maybe down about 30, 40, 50 points this morning. Well, a couple levels. So we have this FOMC high and low, and here's your FOMC candle. And if we open back down in the middle of this, I mean, if we're not clearing 67 and we have a shutdown, let's say we close below the 21 period, Nick, below this 21 period, it's pretty easy to get to the 50.
Sure.
100 plus bars overextended. I think I'm trying to recall the numbers from the last 30 plus years. 102, 105, 112, and 128 are the longest stretches of time where we haven't hit a 50 period moving average on a daily chart. And I believe we're at the 105 mark right now. So we're in top 3, top 4 all time away from this measured move.
Yeah.
105 right now. Yeah. So we've got to be top 3, top 4 all time.
Yeah. I mean, it's a stretched market, Chris. And I actually, just to follow up on your concept about Mag 7 and moving away from it, I'm taking trades on other things. I'm just finding other creative spots. For example, I went long BIIB. This is Biogen. I put a stop below it. I think there's upside in some of these other healthcare names and other areas of the markets. I think that have a lot of room. I also saw you playing utilities utilities
XLU,
a little bit.
Yeah.
Yep, XLU. I bought XEL, which is XL Energy. Doing okay with this one.
Yep.
I'm also long NEE, NextEra Energy. So I've got some like other creative stuff that is away from Mag 7 because I do think that look, I listened to something else. It was like most of the time throughout history, the growth in the S&P 500 is actually more in the mid caps, not the mega like the
Right.
mega tech growth that we're seeing in the last few years is sort of an anomaly. It's not like a norm to get the biggest amounts of growth from the biggest companies, right? The law of large numbers typically works against when you get to be that size.
Yep.
And yet in the last few years, yeah, you've had Mag 7 earnings that have just been ridiculous. And for people who are not super into stock, what we're talking about is like your Amazons and your Nvidias and your Googles, these companies that have put up remarkable growth and who have really carried the US stock market indices higher has been the biggest of the big, which is a very interesting concept. Usually when you get to be a huge company, your growth just inevitably slows down due to the law of large numbers. However, in recent times, we've still had just the winners keep winning, which has been, kind of an interesting thing to watch and take place. So, yeah, to me, I think that you have, I know I've been on this trade or this idea for a while, but I still think you get some Russell outperformance if you do get rate cuts into 2026. If you do see the economy hold up, I think there are other areas that have more potential than the Mag 7, which is just not the popular thing to say. But I think the Mag 7 have sort of played this role in recent times of sort of a defensive area in a time of high interest rates, where I don't know that if we're going to see rates actually get cut, that the Mag 7 remains the place to be. Now, again, I own like Meta. I love, these companies and I own some, but I just think like there's maybe some room to allocate to other things.
I couldn't agree more. I think if anybody is talking about balancing a portfolio, you've got to be overweight Mag 7. Meaning, if you've been holding Mag 7, let's say you're like, well, I'm 50% equities, and let's say 10 of that 50% is Mag 7. Well, everything's going to be higher. And I just think if you're not rebalancing, this is the same thing that happened in February, March. It would be just a little bit of a correction coming to Mag 7. We're talking companies that are trading. These are $1 trillion+ companies that are trading at 30+ times earnings.
Mhm.
Even things like Walmart is trading at like, I don't know, 50 times earnings right now. Costco is like 38 times earnings. Let me double check those numbers here. I'm pretty sure Walmart's like 40 times earnings right now. Let me check.
You've got the
38 times earnings. Yeah.
forward PE of 35, trailing PE of 39, let's call it, price to sales. Yeah. So, I mean, it's an expensive stock. I mean, it is priced because it's got such reliable, consistent growth. But I mean,
But it's
consumers,
never done it before. That's the thing. It's like it's
yeah,
never done it. And I think
it's so expensive.
you have wealthier consumers that are now shopping at Walmart. I just read something from Dollar General that they're getting 6-figure demographic shoppers now at Dollar General. That's
Yeah.
crazy,
I mean,
dude.
I go to Walmart all the time. I love the prices. I feel like every time I go to Walmart, I get, great discounts, and I find the store really actually quite easy to navigate. So I like Walmart. But anyways, Chris, just to also add in even more to this, when you're
Mhm.
talking about a stock like Walmart, the 3-year averages on these things, which the last 3 years have been very good,
Right.
we're still significantly above the 3-year average. Like in a really good period of time, recent 3 years, Walmart's traded around a 28.5 forward PE ratio and a 36, let's call it 3-year average PE ratio, trailing 12-month. And we are still above both of those by a substantial margin. So you're talking about quality stuff happening for these big companies. Like there is growth. These things look great, but they are priced for that.
Mhm.
They're not cheap at these levels. So something to think about. Also, just a real quick thank you, Cameron, for donating to the stream. Donated $5 to the stream. Says might have missed it, but dollar yen update. Shifting gears here for just a second, Chris. What is your thoughts on the Japanese yen? I went long dollar yen. Not working out in my favor here today. Dollar weak with, of course,
Oof.
everything going on.
Yeah.
But I may add to the trade. It's not a tight stop trade. It's more of a dollar cost averaging approach, which you got to be careful with the yen because they move quite a bit. But I may continue to watch that pair and maybe add a little bit at the bottom end. But what are your thoughts on the yen?
Well, it's a pretty big daily candle, weekly candle setting up, but we have a lot of levels to clear. If you look at the weekly chart, this is pretty much spot on with the Japanese yen and what it does. Look at how much indecision we've seen since the middle of July. All of these wicks, highs and lows with tiny little bodies. It's just a bunch of noise. Here's what I'd say matters. I think a weekly chart takes away a lot of the noise on the dollar yen. And if we get a weekly candle that can close a buffer below. So as much as it is a nice strong move for the last couple of days, it's still noise in my opinion, unless we come below, let's say 146, 145.90. If we can close below that, then I think there's more room to the downside. It looks like the structure would be giving way. If the structure gives way, then I'm a fan of the dollar yen heading back down to the neckline. And I'm also a fan of this neckline breaks. I'm a fan of this thing going to, we talked about this before, Nick, 1.20, or I guess 120, sorry, 120. That's a monster trade. But if dollar yen's going, that means I don't just trust the yen if it's only dollar yen. I want to see almost the entire yen basket lining up this way. So Swiss yen looks good, euro yen looks good, dollar yen looks good. If they're all kind of moving in tandem, then I think that the yen, sustains some movement. But if anything, the dollar's just getting crushed today.
Yeah, I was going to ask, what are your thoughts on? Obviously, you have the whole shutdown thing. Do you give any attention to that? Do you think it has anything to focus on, or is it sort of just?
How much lower can we? I mean, after a 10% sell off, how much lower can we go? And I obviously I say that like I know we can go lower, but from a technical standpoint, trading currencies, trading efficiencies, I don't think that this trend continues lower unless it's going to be like a falling wedge. I still think there's a bid to come back up, and this is what happens in currencies a lot: is you get the price manipulation back up, you'll get the contrarian type move when it's overcrowded, and everyone is thinking short dollar. Everyone was short dollar, seeing that short dollar. I just think it's a crowded trade, so I'm still not convinced we got to sell the dollar. I want to sell the dollar above 100. If it offers it 100, 101, 102, I'll sell the dollar index. But I think the yen is a good one to keep an eye on. Those are the two baskets I'm watching the closest in currencies right now. I mean, this is the first time. So this is now 3 days of selling on the Swiss yen. I've been watching this trade for a while. I think we talked about this the last couple of weeks, because if we're breaking this trend line, that's step one. Where we stop is, let's say that we proceed lower, test this low or break this low. I think we have a swing trade on the Swiss yen. We got to give it a go, man. I think the Swiss yen has a lot of downside potential as well. So
yeah, the Swiss franc has been just a monster this year. But that's the thing with currencies. Sometimes when I talk about currencies, it's very different than my strategical approach to stocks, indices, et cetera, or commodities, et cetera, because there's just it's just a different ball game. Currencies typically they'll trend one direction and then they'll trend back the other direction, and they're just very, very consolidating over the longer term. I want to show you this too really quick. Just that concept about the dollar trade being a bit crowded. Take a look at the commitment of traders data history. US dollar selected in the top right for those of you guys who have the Edge Finder. This yellow line over time shows you the net kind of long percentage of non-commercial speculative investors. These are your hedge funds, etc. It's been in decline. So this has been a trade for quite some time. You've had most of this year. Big money's been on the right side of this. They've made some good money on this one. And so at some point, do I think that they will start to reverse? Sure. Well, actually, kind of interesting. The latest weekly filing showed a pretty big surge in dollar buying. So could that be? We'll see. Is that the start of a little bit of a turnaround here, where maybe some profits are being taken into end of year? We'll see. I mean, the dollar trade, like you pointed out, has been a popular short for a while, and it's been a successful short, I think, for people who have, especially institutions who have been on the right side of that move. But yeah, I mean, that's the thing with currencies is just scroll out. If you need to prove it to yourself, look at the dollar index over this is going back to 1989. Dollar index just goes back and forth over the super long term. Sure. So just something to bear in mind is that you rarely see currencies just trend one directional for a long time. I mean, maybe the exception, at least in recent times, has been like the dollar Swiss franc, which has just been, in a downtrend for a very long time. But
and CAD Swiss franc.
Yeah,
and New Zealand
right.
Swiss franc.
Right. Yeah. I mean, the Swiss franc has just been so strong.
It's been a beast. One way that I am getting some exposure in the Japanese yen is FXY. I'm trading the shares long. Because if we are going to see the one, and one thing I will say about, let's say we're correct on the dollar yen, Nick. Let's say it goes down to 140, breaks neckline, and we got this monster trade down to 120. Huge trade. However, every broker is going to charge you negative interest and swap to take that trade. It's kind of the inverse of FXY. It's kind of the inverse of 6J, which is Japanese yen futures. I have shares long of FXY, and I have a head and shoulders pattern. I've got a measured move. If I bought this thing back around this low 50s. So I've been scaling it this a couple times, but I'd say 50 with some options that I've traded. I think like 54 is my break even. I actually have a break even that's below this because I sold some calls and did some puts out of the way. But long story short, 54-ish, $55 my break even. If this thing gets up to my measure move, that's 74 and change. This also is, there's no commission. I buy it once, I hold it, and I don't have negative swap. That's the one thing that does, it just annoys me. It's not like I'm nervous about trading the dollar yen short. It just annoys me because you and I both know that we could see it break that floor that I just talked about, come back down here, sucker in this like trend line, and then go right back up to 150 again and not go anywhere. And I also wonder if the consequences of the dollar yen going down to 140 or going to 120, there's no way that can be good. I mean, in a currency market, that is way, way, way more risk off. That is way more deleveraging. And I just don't see that being good for the equities market if we're going to see that much movement in the Japanese yen.
No, it's very unlikely that would not cause some sort of freak out in markets, because again, that's, the age-old trade in currency land is sell the yen, buy other things to buy U.S. stocks or foreign stocks, et cetera. So it's a leverage provider. So, I think that historically, Chris, one of the big things that has been a driver of, because you can remain overbought. Like we say this often. If you're looking at stocks, if you're looking at, take your pick of something and everything seems to be up, right? Everything is expensive right now. Historically speaking, what I've seen so many times is the trigger that gets the market to actually say, oh, we're overbought, now we sell off, is not, oh, it's overbought. Like the fact that the stock market is overbought and expensive does not mean that it has to come down. It can continue to be that way for years to come if it wants to. Just take a look at the late 90s. It was expensive for multiple years in a row and had exceptional returns to the upside. What typically causes the market to fall down is a shocker. And that shocker can be two main things that I keep seeing over and over. Oil prices shooting up, causing worries about inflation, which is really ultimately the same thing as part number two. Part number two is interest rate hikes. Interest rate hikes deleverage the whole thing, right? It kind of forcibly says, especially Bank of Japan, which has mentioned they want to hike rates. So if the Bank of Japan starts raising rates, that is a deleveraging event and forces people who may be super long stocks, super heavy. A lot of hedge funds, they short the yen, they sell yen and buy, U.S. stocks, for example. So I do see that those things are potential risks to a supply shock or a shock to the markets. But typically it's not going to roll over. The markets are not going to roll over unless you have some sort of actual trigger, some catalyst that forces markets to wake up and say like, oh yeah, we're pretty expensive here.
Sure. I don't know. And I almost wonder if even a little correction down to like the 50 period moving average has to be some type of shocker type event. I stare at this stuff every single day. And positive gamma has been in the options market a lot this year. This is outside of obviously the correction we saw through February and March and April. This feels this like reflexive rally that we've seen since the bottom in April feels an awful lot like 2017, where the market just found any way to go higher and it was barely going higher. But it just the persistence of all of these higher highs. I want to say right now we have, we got to be close to like 30 all-time highs for the year. And that's putting us at like maybe top 5 all-time for the market, just making new highs. But that's what happens when you're sitting at all-time highs. We just have to poke. It doesn't have to like go and rip through all-time highs, but we just had a steady run to the upside. And all we've seen, this was a 3.3% correction. This was less than 3. This was, I think, less than 3. This is like maybe less than 2. less than 2. Even FOMC was like top to bottom 1.1%. And then we had like a less than 2% pullback. So, I mean, all these have been less than 2%, less than 3% pullbacks. I mean, a meaningful pullback, previous all-time highs, something along these lines. It's not going to be good if it does happen, Nick. And let me ask you a question. If we go higher, let's say that this market just breaks through 67, melts up to 68. We're probably eyeing like a big round number at 7,000. If we hit 7,000 prior to hitting this 50-day moving average, are you bearish going into 2026, at least near term?
I think I remain sort of just I have to, for me to get bearish, I have to see like structure breaking down. Like for me, that where I would actually take trades, like where I would actually place positions. But would I be buying it above those levels? No. I mean, if it takes me sitting on the sidelines and watching it go up to 7,000, and that's not where I'm going to say, okay, fine, I'm going to buy it, right? Because that to me would be like the classic example of you're buying the final melt up sort of thing.
Sure.
Like, you know, if you look at 1999, when everybody was jumping in, the stock market was just going in a straight line up, and it was just everybody was making money on the long side. All you had to do was be long anything, and you were making just killings amounts of money. The thing with that is that was like the final melt up. So to me, I think if you want to see the stock market continue moving higher, let's hope for some pullbacks. Like if you want actually to see the market to continue to grind higher, don't let it enter bubble territory. I don't think we're necessarily like, I think, are we in a bubble? Sure. Big picture, 10 years from now, we might look back and see like, oh yeah, we might've been in a bubble. AI was getting a little overhyped, but I don't think that we're at the end of the bubble per se, because you don't have ridiculous PE ratios and you have companies at the top that are earning tons of money. Until something breaks in the CapEx cycle where you're starting to see, you know, spending cool off and you're starting to see, you know, the consumer crash down. I mean, today's ADP number is not promising, but you have to see like a couple rounds of that data to really signal, okay, we might actually be truly seeing the consumer fall out. But I do resonate with what you said earlier about how it's kind of a tale of two markets. You have these big winners at the top, and you have a lot of companies that are not doing as well. You have the consumer starting to show signs of weakness. You have the wealthy class and the not wealthy class, and it's a two different story market.
Yeah, that's the classic K-shaped economy that we've talked about since COVID. I'm speaking of 1998. I mean, I'm making a reference here. So, I mean, 95 to 99, 95 to 2000. That market has, I mean, that's a big climb, dude. We're talking 240% from this little consolidation zone around 1995. But after, I'm just trying to pull this reference out in summer of 1998, because we had a 20% correction, and we also had a rip to the upside, which is like similar to the reflexive rally that we saw this year. Now, this maybe is a bit of a stretch to say like, oh, it's just like 1998. But what I did notice in 1998 is it wasn't smooth sailing to the upside. We had a nice reflexive rally. We reached all-time highs again, but then it was lots of sideways, up little. I mean, these pullbacks are meaningful, where we have a pullback of, there's a 5+% correction. There's probably a 5-6% correction. Yep. And then we have another maybe double-digit correction. So, I mean, the market still goes higher, but this is what I want. This is what I'd like to trade. This is what I think we'd agree on is, I find myself a much better trader if I can continue to participate on dips, as opposed to all I've been doing is getting year-to-date highs on melt ups. I mean, I'm still trading, but I'm trading like out of the way, man. I'm trading so far out of the way. I'm taking stabs at trades that are lining up with like a 92 to 96% probability based on the options market. I've also seen that the VIX has been slightly elevated. The VIX is an odd instrument this year. Another thing that might be a really good trade is, let me see if I can pull up my, I've got another workspace here. So the VIX at 16.7, we were up above 17 overnight. I mean, I think long vol might be a really good trade. I'm actually curious how far out I can go. I kind of hate it, but if I took a synthetic position on it, that allows me to, whatever it costs me, at least it's uncapped profit potential. So if I were to go VIX, gosh, I mean,
Chris, I'm long the November 17th or November 19th. Yeah, I'm long
19th,
VIX.
yeah.
November 19th. I have, let me just pull it up. I've got it. It's not gone well because I bought the call spread and then also calls, just naked calls like
Let me
I
see
bought
if I
that like a month
can.
ago, so it's not been great, but I'll still pull it up just to see where we're at with this.
I mean, I can do a
Um,
I can do a synthetic. I can do a synthetic long where I sell a put, buy a call. It costs me $500, and if we get any type of spike to like 25 or 30, that would pay pretty well. So I
Yeah.
mean, it's capped risk. The most I can lose is $2,100, and I mean that's a bit on the pricier side. If I want to cap the downside, then I buy another put. So I mean that takes it down a little bit. Let me cap this thing. Yeah, I could
Yeah.
go long call. Anyway, that's probably what I'm doing is like a synthetic on VIX just to see if this thing runs up. But I just vol suppression is so real, man. It's like the VIX has such a difficult time getting above 20 right now that
Yeah.
if it happens, and we also know that during opening bell to closing bell, I might not see the trade that I want. Like I may not exit where I want to. So we'd have to have like
Sure.
a pretty meaningful spike up to like 30 or 40 again in the VIX for me
Yeah.
to really like that trade. So just to flush up the 20 does not make that VIX trade pay me. I want
bought
like the scary stuff.
Chris, I bought the $18 strike price November 19th this year calls.
Okay.
I spent $2.92 on it. Of course,
That's good.
Yeah, I did okay with it. I mean, I'm not.
Yeah.
I to me, it's like I'm the same way where I still have net delta longs in my portfolio. Like I still own a bunch of
Same.
stocks, and if
Yep.
the stock market keeps going up, then fine, I'll continue to ride that and make some money off of it. But I bought, and this was a starter position for me. Like this was not a huge risk in the account. But if we stay, I'll say what I'll tell you this: if we just go right back down to the bottom end of volatility, I'm gonna size up a little bit more.
Sure.
I mean, these are tiny positions for me in the portfolio, but like to me, I think that there's just too much. The thing is, I think we're in an environment where if I'm being cautious, the thing that I have is I think everything is expensive. Like you look around the room and it's like you can't buy anything for cheap pricing. I would argue for the most part, very very
Mhm.
rare to find. You have gold up, you have Ethereum, crypto up, Bitcoin up, stocks up this year. So to me, it's just it's a little bit of a hedge or a portfolio hedge. If you get a shocker event, I'm not saying I necessarily think that that's going to happen. And if this expires worthless, what I'll probably do is I'll roll it out probably to like February and just do it again.
Yeah.
Maybe a little bit more size, because I do think you are likely to get. We've had a really low period of volatility. Doesn't mean that it can't stay there, but again, you do typically see these spikes in volatility periodically. And to your point about even the 90s, where you had incredible run-ups, even in really good bull markets, you typically get vol spikes. And we just have really had little to none since the April sell-off, the April sell-off and then the rebound.
Yeah, I think I'm likely to put a trade in today on VIX. I think what I'm looking out is maybe to create a slightly synthetic trade in options. And I'm liking kind of to be on the really safe side. Have unlimited profit potential on the long call and take this out to like March or April of next year. Because even if we have something before the end of this year, I'll take some profit. If we have a reasonable spike to like 25 or 30, I mean, even the flashes we saw back in 2022, when obviously the market was rolling over pretty aggressively, we had the VIX elevated pretty much the entire 10-month run was 20 to 35, 20 to 35, multiple times throughout that 10-month window where the market's making lower highs and lower lows. So even a 30 to 35 VIX is like that position would probably pay close to 100%. I don't think that's a bad play, because right now, like my hedges of like I'm hedging the S&P, I'm hedging the Nasdaq, I've got some cheap out of the money futures hedges. They're probably worthless unless we have the markets coming down. And I'm talking like literally 20+%. Those hedges are going to be worthless to me.
Sure.
They're leveraged like crazy. I mean, it's like 20 to 1 and 40 to 1. Those are awesome hedges and they're super cheap, but the probability of profit just is less and less and less, unless we have the market completely fall over and break April lows again, which I don't think that's going to happen.
Sure. Yeah, no, I mean, it's been a crazy recovery move. And the thing is, this has pretty much been like COVID almost over again, right? You had the very quick drop, then follow through. You had the V-shaped move, and then just the follow through that top. I mean, it's just like classic COVID. I was listening to somebody who's, do you know who Gareth Soloway is?
I've
In
heard
the
that
Money
name.
Stocks. He used to, and then now it's Verified Investing is his company.
Okay.
Anyways, I was listening to him talk about, he was pointing out just measuring a very similar type move. And it was actually right around October where you saw a correction in the market or a pullback. So this is like really similar type stuff where you had, the move down, the move back up, then the follow through to the upside, melted up, and then you had kind of a healthy pullback.
That was a 10% correction, right?
Yeah. So
about
you
a
had
10%, 11% correction.
and right
Yeah.
through,
Yep.
all the way up into November, you were pretty much pulling back. It was a peak of a 14% pullback, 12%, and then we kind of continued our next leg higher. But
Okay.
this is an example of like one of the most clean upward trends that we've had in recent times, and you still have these pullbacks. So it can feel mind numbing when it's happening because you're like, gosh, the thing is just every single day grinding slowly. But I do think you're still likely to get those types of moves. I think you are going to get 5-10% pullbacks. Like I just think it doesn't feel like you will until one day you wake up and it's happening.
Yeah, and it's probably the more thing I'm nervous about is how extreme a bad day can be. It's like there's a lot of stability with 0DT now, so I see this in the positive, negative gamma situations we come in day to day. But a bad day could be all built in with a gap. Similar to what we saw from February to April, we had like 3 to 4% gaps lower. The intraday price action was still pretty contained, but gaps lower. It's like if we're gonna fall, 5 or 10%. It might do it in 2 candles, Nick. It might just be, a nasty day and then a huge gap lower. And then we figure out whether or not that's time to buy the dip. So timing that, I think that's what's going to be so challenging is timing. So I'll go back. Do we need to wrap up here? I'm good at 9.
We usually do. Well, you've got to run. Right?
I got to bounce here in a couple minutes, like a minute. Yeah.
Yeah. No worries. You head off. We can continue it next time. It's unless
okay. I'll be back on. I think I'm back on tomorrow and Friday, so I'll put a pin in this. I'd like to continue the conversation. I think this is important for just how to time / get ready for market dips, and that's where we talk about dry powder. So more tomorrow.
For sure.
All
right, Chris. Thanks for coming on, man. We'll drop the link to Chris's channel if you want to check it out. Chris, we'll see you tomorrow.
Thanks.
See you, man. All right, guys. Chris is on to his next show here. I think that let me just switch this over. I think we're supposed to have someone coming on, but I'm not seeing anybody just yet. I think we have Marco coming on at 9 usually. Let me just message our producer, make sure that is the case. Anyways, good stuff with Chris. I mean, it is always good to hear what he has to say. How's your dollar yen trade going? Not great, but for those of you who are not super familiar with my currency trading style, so when it comes to currencies, I don't use like a tight stop or a trailing stop method like I do with commodities and indices. I trade currencies a little bit differently. The reason for that is that currencies are different in terms of their nature for the most part to the way that certain markets have more of a trendy upward drift, like for example, gold, silver, indices, stocks, etc. Yes, Marco, I got you, man. Let me share you that link. We can get you in here. Hold on. Okay. Okay. All right, Marco. Sorry about that. Just got you the link. You can join there. We'll have Marco in just a second. But yeah, anyways, with currencies, I'm more of a dollar cost averaging type trader, very long-term, slow and steady. Like I have a tiny long position on dollar yen. I may be looking to potentially add a second one here. And if we can catch a swing back up, great. And if we don't, then I'll continue to let the trade play out until the fundamentals. If the fundamentals deteriorate and I no longer like the idea, then I'll just cut the trade. But typically, currencies have a really interesting style. It's different. You look at dollar yen, like dollar yen, though it moves with more volatility than other currencies, it typically doesn't go anywhere. Like at least in the last few years. Longer term, it has made big moves. Like if we take a look at, the monthly chart, you can see you do have these really big trends that take place. But with small enough sizing, I use a dollar cost averaging approach. That means that, basically day-to-day moves, very little impact on the account. And then I can kind of manage the position day by day. If you want to learn more about that, you can search it up on YouTube, look up Trader Nick dollar cost averaging Forex, and you can find my video on that. Or I'll just drop the link here. Give me a second. I've got the video link saved on my dollar cost averaging video. Here you go. If you want to check it out, feel free to do so. But it's a very boring strategy. It will not make you a lot of money. It will also, be incredibly slow and incredibly boring. Currency trading is something I've done for years. It is the most boring thing in the world by far in terms of what I do in trading. And it's also very consistent. So I've done really well with currency trading over the years simply by using an incredibly boring, low risk, low reward strategy. It just doesn't make a lot of money. It doesn't lose a lot of money. And it just over time grows and compounds. Anyways, guys, we have Marco taking over the show here in just a moment. Before we go, let me just remind you, if you want to join our free Telegram channel, we got our Discord up there. You can join that too. But here's the Telegram channel. Join the Telegram channel, scan the QR code, or click the link in the chat here. Let me share this link for you. Boom. Join us in Telegram if you are interested in free market analysis each day. We share trade ideas, fundamental analysis, macro commentary, etc. So join us there if you have not already by scanning the QR code or using the link dropped in the chat. Now just give me 1 second and we will go ahead and bring in Marco just after this quick break. See you guys. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream.
Hello everyone, welcome to my segment of the live stream. I do hope everyone is doing well. And let's get into the theme for today, which is, as far as I saw in the A1 Discord, a lot of people are concerned about the government shutdown. So they did initiate the shutdown. People are wondering what's going to happen to the US dollar. We already had a sell-off in UJ today. Stock market is down. Nasdaq is down. So people are wondering, what does this mean? Will the massive sell-off continue? Will the DXY continue heavily dropping? And are there any opportunities to trade this event? Well, let me give you the analysis. So for these types of events that I haven't really traded through them, but they have happened in the past, my best advice is to use artificial intelligence. Okay, so just a second. Wire. So artificial intelligence is your biggest help. Why? Well, because you can do a lot of research, a lot of digging in a very small amount of time, and you can get a lot of data in also a very small amount of time and with minimal effort. So using Grok AI, this is the analysis of the past shutdown events, past shutdown dates. So we had one in 2013, also second one 2013, then 2018, 2019, and now 2025. You can see the duration: 1 day, 16 days, 3 days, 35 days. I'm not sure if this data is 100% accurate, but it doesn't really matter if it's a little bit off. You get the idea. So the average duration is anywhere from 1 day to all the way to a month. UJ reaction. So minimal reaction, declined here, depreciated here, declined here, and early decline during this time as well. If we go to UJ, okay, so a sell-off is happening. And now my next question for Grok AI was UJ higher after the shutdown? So after everything finished, did it go higher? And in most cases, it did not. But from my research, UJ actually returned close to the previous levels. So that means we had this initial sell-off, but once the shutdown is over, and it will be over, it's not like the end of the world. It's not a massive panic event. It's not an event that should influence your own trading. But I think this can happen, or this will happen. And then once the whole shutdown thing is done, we go back to the initial level. So we kind of go back to the mean. That is at least what has been happening in the last couple of events when there was a shutdown. So should you implement this in your own trading? Should you use this as an edge to, for example, sell the US dollar, sell the stock market? I would say I wouldn't do that. So as far as the current situation goes, as far as what history is telling us, it'll be fine. It'll pass. The shutdown will last a couple of days, maybe even a couple of weeks, and then we will be back at normal levels, back at normal operation. So, yeah, I wanted to say something else, but I kind of forgot about it. Anyway, let me check the comments. Let's see. Silver is crushing. Don't you see if these brokers? I trade futures and FX spot. Okay, so Ballout is talking about the specific issue. Gold. Okay. Yeah. So we're gonna go through my watch list. Nasdaq, gold, silver. Them just flying higher today. Aussie CAD, USD CAD, and Euro CAD. So looks like the Aussie CAD is close to breaking this high, and that way I will be able to move my stop loss. So, but let's start with the first one. So I wouldn't bet on the sell-off because of the shutdown. I wouldn't place my bets. Yeah, what I wanted to say, NFP. We do have NFP on Friday. Now, very likely NFP will be delayed because of the government shutdown, because the BLS won't be working properly. So NFP numbers probably will get delayed. Is it a big problem? Is it a huge problem? In my opinion, it is not. So I know the Fed is closely watching the NFP. I know we have 2 rate cuts scheduled. So if we go to the Fed Watch tool, and we have basically a guaranteed rate cut in October and in September. In September, we also have a guaranteed rate cut of 25 basis points, as far as I can see. Yeah, like 89.1% chance that there will be a 25 basis point cut. So interesting probabilities. We will see what will happen. I'm looking for pullbacks on the Nasdaq. I have my alerts set. As you can see, I'm looking for a pullback to the support level, and then I would look to buy. Gold flying higher today, silver flying higher. I don't want to buy these all-time highs. I don't want to buy these levels, but I am looking for a pullback. I'm looking for a support level to get in on this uptrend. So for gold, I'm looking at 3,600. Silver, I'm looking at 42, maybe 43. Okay, support level to get in. Aussie CAD, as I mentioned, I'm in a trade waiting for the break of this high. If we do break the high, I will be trailing my stop loss. Did we break the high already? Let me check. So you can check always the highs and the lows on the top. Let's see. So 273, 252. So we haven't broken the high yet. If we do, I will most likely move my stop loss on this trade to this level, or maybe even to this level, just to lock in some profit, or at least to get out for a break even. USD CAD, funny enough, USD CAD is pushing higher, even though the DXY is down. So even though the DXY is kind of going lower, USD CAD is still holding up pretty nicely. So that is good to see. And I do have a take profit set. I have my stop loss set in the markets as well. And I'm just leaving this trade to play out. Okay. So I'm leaving this one in to play out however the market wants to play out. Currently in some profit. I think it's more likely that we go up than down. I think the CAD is still super weak. The weakest currency right now. So the first one is the CAD. Second one, I would say, is still the pound. Very weak currency as well. And the Euro CAD trade is finally starting to get into a little bit of profit. My stop loss is pretty big on this one. But yeah, as long as it's going higher, I'm going to stay in this trade, maybe trim my stop loss a little bit. All of these updates, all of these trade ideas, all of this analysis, you can get in the A1 Discord. So quick plug, if you want to join the A1 Discord, if you want to get the Edge Finder software where I do most of my analysis to take a trade or not take a trade, you can use my discount code, which is MARKO. You can get a nice juicy discount for the Discord group and for the Edge Finder. I'll see you in the Discord. That's about it for my specific watch list. So Euro dollar, sure, and Bitcoin. So let's do Euro dollar. For me, both the euro and the dollar right now are kind of strong currencies. So euro, we're getting some long-term good data. I think the euro is on a way to appreciate, while the dollar, I don't want to short the dollar. I know we are expecting rate cuts, so I know that is expected, but I wouldn't want to short it because I think that trade is still kind of overcrowded. I don't see a massive catalyst for the dollar to go below, let's say, 96.4. I just don't see it. I know what was the catalyst at the beginning of 25. It was Trump, new policies, tariffs, new sort of economic, how would you say, regime. And that scared a lot of investors. That made a lot of investors sell US dollars. So what will be the next catalyst for us to greatly sell off the DXY? I just don't see it. So I'm not willing to be short on the US dollar. For that reason, I'm not willing to buy euro dollar. And I would definitely not be looking to sell this chart. It's in a clear uptrend. Lately, though, it's been kind of flat and range bound. So in my opinion, there is better opportunities out there. I think if you get in on this trade, as far as the current situation goes, I think you're just going to be stuck in a range. You'll be paying negative swaps as well, which you don't want to do. If you want to check, what are the swaps? Euro dollar. Whoop. Euro USD. Yeah, so you can see if you buy euro dollar, it's a pretty expensive. I mean, it's not that expensive, but you are paying negative swaps, so you have to know that. Crypto, is crypto moving? It actually is moving. Damn. Okay, cool. Bitcoin moving higher. Why is that happening? I don't know. I have no idea. I haven't seen anything in the news. I haven't seen anything on Financial Juice, but definitely pumping higher, which is good for my crypto investment. Maybe we can approach the all-time highs. Right now, I'm not looking for any buy setups on Bitcoin. If we do manage to reach these highs, or maybe go even higher, I would be looking for some short-term buy setups. What would be the catalyst? What would be the fundamental story? I don't have it yet. So I'm going to need to assemble a story, see if there are any confluences. But let's just first wait. Let's first wait a bit. If we can actually reach those levels, if we can actually reach the all-time highs, because we could just be consolidating in this area sort of before a huge breakout to the upside. But this consolidation can last for a long time. And if you use a CFD broker, you will most likely be paying negative swaps to be in this position. Okay. So that is why I want to see a breakout first. Ethereum, I thought we were going to melt lower. So I thought Ethereum was kind of going to heavily sell off, heavily pull back. That is not happening so far. We did break down from this consolidation phase and then retraced. So possibly going back into the consolidation phase. But yeah, not sure about Ethereum. Bitcoin, I like that Bitcoin is at least moving a bit higher. It's positive on the day. It's even positive on the week, I believe. Let's see. I mean, on Sunday, we had quite a big move to the upside. So from these lows, we're up 6%. That's good. But I need to continue. I need to see the momentum actually follow through. And then I would look for potential buy setups. So that is what I'm looking for. GPUSD, sure. Elafi, hey, what's up? Out Main says Marco selling the euro dollar is positive swaps, not negative. Yes, but I'm talking about buying it. So I told you I definitely would not be looking for sell setups. If I was looking for setups, I would be looking to buy. And if you buy euro dollar, you'll pay negative swaps. So it's an expensive proposition. So that's another negative. That's one less reason for me to look for actual buys on euro dollar. But if I had to give you a bias, I would rather buy euro dollar than sell it, if that makes sense. What is your bias on Aussie yen? Okay, sure, we're going to do Aussie yen. Thoughts on gold? Okay, I can repeat gold. Nor says, hello again. Sorry, I'm late. No worries, you came just in time for my segment, but you missed Nick and you missed Chris. So maybe next week. I highly recommend you guys check out the live stream schedule. Okay, so James from the A1 team builds this schedule every week. You can see exactly who is on at what time. So tomorrow I'm on at 10 a.m. Eastern Standard. Friday I'm on at 9 a.m. Eastern Standard. So yeah, this is nice. Aussie yen. Before GBPUSD, I'm going to do Aussie yen. For the Aussie yen, for the Aussie, we had a central bank meeting. It was yesterday. So cash rate, RBA rate statement, RBA press conference. What actually happened, it was a hawkish event. They paused the cutting of interest rates. They kept rates the same. They sounded a bit hawkish. So from my research, it was an overall hawkish event, which made the Aussie gain some value. It should be reflected here, shouldn't it? Oh, sorry, this is the daily chart. Why isn't it here? Yeah, here it is. So yeah, on Aussie USD, I think there was a better reaction yesterday. Yes. So this is the Tuesday candle, and you can see a bullish reaction for the Aussie. As far as the Aussie yen goes, daily charts, I would probably look for buy setups since it's in an uptrend. The Aussie I like. I think the Aussie is doing okay. I think the economy is doing well. I think long term they're doing okay. If I check some of the data, let's see for the Aussie. Most recent data, not so great. Only 28% of the data is coming out better than expected. But long term is doing okay. For the yen, I still don't have a bias. You have to note there are elections in Japan. Prime Minister. Let me show you quickly. Japan. Prime Minister, Poly Markets. Nope, not this one. This is a cool website if you want to see the odds. So first guy, Koizumi. Second guy, Takaishi. First guy's hawkish, second guy, or is it the girl? I don't know. They all kind of look very similar. I'm sorry, from these pictures at least. Let's say this is a girl. She is dovish. So if Koizumi wins, yen should appreciate a bit. If Takaishi wins, yen should lose value. So let's wait a bit. I think the 4th of October is sort of the due date to see the results. Until that happens, I will be a bit more patient on the yen. A UJ, for example, I'm being also patient on. I took a very small buy scalp, which is a strategy I'm testing currently, which was a nice win, but now it's selling off. I think we're just going to remain stuck in this range for a while. I think there's no massive catalyst right now for a breakout, and there's a pesky buyer. There is a pesky buyer at this level who just keeps buying up this chart. Long-term dollar rate cuts. Japanese yen rate hikes are actually scheduled, priced in. So you should technically, if this currency pair followed the interest rate differentials, technically you should see this go down. It's an expensive proposition. The swaps are going to be very expensive to sell USD yen. And lately, USD yen has not really been following, the price has not been following the change in the interest rate differentials. So it's tough. It's problematic. Not my favorite chart. I'm looking for a breakout on UJ, either of this level of resistance right there or of this level of support. Okay. So that is what I'm looking for UJ. Until that happens, I won't do anything. And even if that does happen, I'll still need to reevaluate the whole plan, because I would maybe prefer to sell it, but it's expensive. Okay, it's expensive. Look at the swaps. Look at the Edge Finder. Look at the carry trade scanner. USD JPY. See? Very, very expensive to sell. We said GBPUSD. I can do that for sure. Let me just check the other comments. Aussie New Zealand, Slugmeister wants Aussie New Zealand. We're going to take a look. How do you know which guy is hawkish or bearish in Japan and others? Just some research, reading up on different articles, talking with artificial intelligence. And from my research, Koizumi is hawkish, so he wants to raise rates. Takaishi wants to keep rates the same, maybe even lower the interest rates. So this guy hawkish, this girl guy, I don't know, dovish. Ballout says you can tell who is a girl or a guy by their hairstyle. Maybe, possibly. Let's wait for more data. Well, NFP could be delayed this week, so not sure what will happen with NFP. That's sort of the biggest event. Okay, just a second. That is sort of the biggest event that we have. If it gets delayed, no data, what will be the reaction? Probably flat markets until we get the actual release. We shall see. And I do want to take this time to mention the sponsor of today's video, which is DNA Funded. So this is a demonstration account that I have. It's a 100K account, just to show you guys how the platform works. If you guys are looking to get funded, expand your trading capital with a safe prop firm, with a, let's say, a reliable prop firm, DNA Funded is the best option for you. So you get a reliable prop firm where the team is serious and they know that they're running a business. The biggest issue with prop firms is that the people running it are teenagers, they have zero experience, and they like to flex their money online, so you know they're super shady. Second problem is, on most prop firms, when you make a payout, when you make profits on the fund account, you actually don't get paid out because of some crazy rule that they made up. So you need to go with a prop firm that is reliable, and that you know, if you fill all of the criteria, if you successfully, let's say, finish all of the criteria, you will actually get paid out. Also, why it's a good option, you get 25% off any challenge using our discount code, which is A1 Live. So this discount is specifically for you guys watching the daily live streams, and you can get 25% off on any single challenge. So take advantage of that competitive pricing. I don't think you can get a better offer anywhere else, and I'm talking about the small number of reliable prop firms because there's so few of them. Most of them are super shady, super scammy. So if you use our code, you're going to get a good price and you'll get a good prop firm. Getting back to it, and I'm simulating my trades on this account. So I mean, I already had a winner on UJ, and now I'm in Aussie CAD, which is in profit, and that was a signal in the A1 Discord as well. That's this one, Aussie CAD, which is flying quite nicely. So I'm pretty happy about this trade. I'm pretty happy about selling the CAD. Also, what helped me yesterday is Aussie interest rate decision was hawkish. That was a big help as well. Okay, so let's see. So we had some requests just so I don't miss them. Aussie and we covered Aussie, New Zealand, and GBP/USD. So let's first do GBP/USD. For this one, I want to sell. I don't like the pound. I'm bearish on the pound. They're getting some really bad data, both short-term and long-term. If you go to the UK, see this is short-term impact. Long-term, you can check out the GDP, GBP, kind of all over the place. You can check out the unemployment, which is rising. Okay, 4.7 and rising. You can check out the inflation, which is the worst part, rising. Stagflation. Stagflation, bearish for the currency. Dollar, I'm kind of bullish on. So I want to sell, but I think we're stuck in a range right now. So it looks flat, it looks range bound. I first need to see this break this level of support, and then I would look to sell. That's what I'm waiting for. Pretty much the same thing I'm waiting for on the Euro GBP. I'm looking for a breakout higher, breakout of these highs, and then I would look to buy the Euro Pound. Until that happens, my hands are tied because we can just get stuck for months around this resistance level, okay? And that means negative swaps. That means a very expensive position, okay? So Aussie, New Zealand, just so I don't forget, Aussie I like, I'm bullish on. For the New Zealand, unfortunately, I haven't done much research. Damn, this looks crazy. So for the New Zealand, I haven't done much research on. We can check out quickly the short-term data, bearish. Only 25% of the numbers are coming in better than expected. We can check out the GDP and ZD. I haven't done much research, to be honest. Negative, kind of all over the place. Unemployment, sort of rising. Actually, sort of rising. So interesting. Inflation, let me see the inflation for the New Zealand. Inflation, yeah, it's above target. It's above target, 2.7. So maybe even rising a bit. I would say, actually, both the short term and the long term are kind of bearish for the New Zealand. And again, Aussie I like. So going long, Aussie New Zealand might not be such a bad proposition, might not be such a bad trade. It's also in a massive uptrend. Is there any sort of, yeah, this is resistance here on the top. But if we can pull back to the 20 MA or to this level, maybe executing a buy position, limited risk, aiming for this level of resistance, the highs could be smart, could be a nice trade opportunity. So I like it. Thank you for the suggestion. I'm going to consider this trade, but I would need a pullback. I think we're a bit overextended at this level. And again, right here, if I buy, I don't have a massive reward to risk opportunity to the highs. So I would much rather get in a bit lower and have a better reward to risk. So get in a bit lower, target the highs, have a tight stop loss. Instead, if I get in right now, the reward to risk is super bad, right? Okay. So why isn't anyone talking about tariffs and no trade deals made? It's no longer the narrative. The current narrative has flipped. The narrative used to be tariffs. Now the narrative is, and I'm going to go on for a minute more. I think there's one more guest behind me. So the narrative is the Fed. What the hell is the Fed doing? That's what currently everyone is focused on. And that is about it. Okay, let's just see. I passed last comment. I passed the prop firm challenge last year and quite literally canceled my account as soon as I passed. Well, it's probably one of these very shady prop firms. Most of them are super shady casinos, and they're just here for a few months and then they're gone. So if you're gonna put your money somewhere, choose a reliable prop firm. DNA Funded is one of them. The biggest telltale signs of a reliable prop firm, two of them. First one, the pricing. If the price of a prop firm is like 70% cheaper of everyone else in the competition, the prop firm is a scam. Second one, who is running the prop firm? If the CEO is flexing online with Lambos, Ferraris, crazy trips, and if he's 17 years old, it's probably a scam. So choose a reliable prop firm. DNA Funded, get 25% off with A1 Live. That's it from me. I am streaming tomorrow. And if you have any questions, if I missed any questions, you can join me tomorrow and you can ask them tomorrow, basically. So thank you very much for watching, and I will see you on Thursday. See you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. How's everyone doing? What day is it? Wednesday. Happy Wednesday. Happy hump day. Halfway through the week. Hope everyone's good. Shutdown is real. Yes, the US has shut down. It's done. No, I'm joking. It's no big deal. I think Marco went over it. I've also made a YouTube video this morning going over it. It's really not anything that's really worth talking about, to be perfectly honest. It's happened many times in the past. I'm sure it'll happen again in the future. The only thing... Oh, my camera's gone. It should come back. My apologies. For some reason, I'm having to use a proxy. I've got to use OBS to stream my camera. Then I'm using StreamYard to pick up that. So I think the connection's a bit weak. Anyway, what we're talking about, the shutdown isn't going to lead to anything really in the market. So it can lead to a little bit of pressure on the indices and equities markets, just as we see a bit of uncertainty. We can also see the dollar get pressured as we do see flows into things like yen and Swiss. In terms of swing trades, though, irrelevant 100%. The only concern really is, are we going to get NFP? Because when we have government shutdowns, it's about money. So we get things like the Bureau of Labor Statistics not working. So we're maybe not going to get NFP or unemployment data. So that means that if that's sustained and we do see the government shut down for a long period of time, the markets might start moving a bit more irrationally on smaller levels of data or less important data because there is no reference points anymore. Or sorry, not no reference points anymore, but do you get what I'm saying? There's no market moving stuff going on for us to position around. And then again, that can lead into central bank things. So what can the Fed do if there's no NFP prints? Well, they can really just hold. But anyway, I don't think it's going to lead to that. The longest one we've had was 35 days, and that was in 2018, December, I'm fairly sure. And that was also under Trump. But yeah, we'll see. Again, I don't think it's really worth even bothering about. Let me see if I can fix my camera. Just bear with me for a second. I don't think I can. There's nothing I can do about that, unfortunately. You're going to have to just deal with it for today. Ian, hello. Jacob, Slugmeister, Noir, Arthurmain. Hello, guys. Hope everyone's well. Ball Out's here as well. Good stuff. Ball Out's always here. Loyal viewer. So positions. I'm still in the S&P. I've reduced a lot of my risk. I was just getting a bit carried away, so I decided to just loosen up a little bit. So I did have 3 positions on the S&P. Decided to just reduce it down to the first initial entry. Pound Swiss. This one's a banger. Now, I made a reel about Pound Swiss on Instagram. It should be out in about 8 minutes, actually. I've got it scheduled to go out. So Pound Swiss, and I'm probably going to cover this one maybe in a bit more detail tomorrow, but I think this could be a very, very good carry trade into 2026 and throughout 2026. So, you know what? I guess we'll cover it now. I think we've already had a couple of guests and things that have gone over analysis and taken questions. So let me just show you the yields here. Bear with me. So the Swiss National Bank is currently sat at 0 interest rates. When have we seen that before? Well, we saw a very similar thing with the yen. And what happened with the yen? Well, it was used as a carry. So people would essentially use it to buy into things like dollar, pound, euro, etc., and you would get paid swaps, hence carry trade. So what we've got is a big yield gap between the pound and the Swiss. Now, the pound I'm choosing specifically because of a couple of different reasons. We've already got Morgan Stanley that's in a long position. So I was like, you know what? That's pretty cool. We've also got a lot of the UK negativity is actually priced in. Now, I'm always talking about, I don't like the pound. I don't want to hold the pound in my portfolio, blah, blah, blah. However, yes, it's weak. But you know, there's things like fiscal issues. There's lots of problems within the UK. But again, it's priced in. The markets already know it's happening. It's gone. So I think if we can get the UK to deliver some solid data, we do have a lot of potential for higher prices on pound Swiss, specifically on the pound, because it's just been so depressed. Again, camera, I apologize. Because the pound's been so depressed, it's actually quite undervalued in the grand scheme, especially against the Swiss. And there's also not really anything in terms of geopolitical landscapes that are really driving the Swiss. So we've obviously had tariffs, we've had rate cut fears, we've had a lot of things this year that have dragged the dollar down, causing inflows into safe havens like yen, Swiss, gold. And those things are not overly relevant anymore, I don't think. So yeah, I'm long pound Swiss, and again, I'm getting paid. And I don't see the Swiss National Bank hiking rates anytime soon. I could see the Bank of England staying on hold, or at least cutting very gradually, because they do have relatively sticky inflation. So yeah, I think pound Swiss could be a big boy trade eventually. I mean, euro dollar, this one's been an absolute nightmare to hold. This one has been definitely not a great trade. I mean, look at this. I actually got in a bit later. Like I said, I repositioned my portfolio and misclicked the close, so I had to re-enter. But yeah, since entry, it's just been horrible sideways. Again, the only positive for this is that we get paid swaps to hold shorts on euro dollar. I think I said euro pound. I meant euro dollar. But yeah, overall, it's just a horrible trade to sit through. And euro Swiss is basically a very, very similar idea to the pound Swiss position. And I'm in the Nikkei. So again, close the higher position I had just to bring down the average price and reduce my open risk. So I'm just seeing if we can get the Nikkei to come back up into these highs. Very small position, still looking to DCA if we can come down slightly lower. But yeah, nothing overly interesting going on there. But that's all my active trades. So I don't think there's any change since last time we spoke, other than the pound Swiss. I think everything else you guys have already seen. All right, let me see the chat. What's going on here? Happens at least once a year these days. I wouldn't say once a year, but it's happening. Yeah, it happens often. Nat gas. Yeah, I've not looked at nat gas since we last spoke, Ball Out, I don't think. Let's see. Yeah, it seems to be having a nice little run here, but still kind of sideways. So I'll see again. I do like the idea of nat gas. I think it is quite undervalued, or it has a lot of room to the upside, but entry just now, maybe. We do have a slight trend change here with the moving averages, so I might place a position if we can have a little pullback to around 2.9. What about market? What about it? to US 30. Well, PMI is a measurement of inflation. So if we have inflation ticking up, that can lead to rate hiking ideas, which can then lower the prices on the indices and equities. So US 30, Nasdaq, Dow, etc. If we have low inflation, it can do the opposite. We can see a bit of price appreciation in those markets. Shalom to you too. You like my accent? Thank you very much. Fee, hello. Have a look at Euro Pound, thoughts on New Zealand US dollar shorts. New Zealand US dollar shorts. I was actually looking at going short just as I came on stream. I was looking through the market, so I'll go into that in a second. Euro Pound, I don't really have an opinion on. It's still on the watch list. I was considering going long because it had quite a good bullish reading on the edge finder. However, it seems to have dropped off, so I've lost my interest. If you are still in the mind of being a buyer in this market, I think that we're actually coming into potentially quite a nice long position or long area. So we've got some highs here that could act as a little bit of resistance. Could act as a little bit of support as we come into this 200 moving average. That would be a reasonable entry point, I think. However, if we end up breaking lower, I would scrap the trade. Again, it's not on the edge finder anymore, so the landscape for this isn't seeming very appealing for me. So New Zealand US dollar here. Yeah, I think if we can come up slightly higher, we're in for quite a nice opportunity to go short. We do have New Zealand US dollar here on the edge finder with a bearish reading of -6, which is very nice. So what's moving against us? PPI year on year and unemployment are really the only things not in favor. COT seems quite flat. But yeah, overall, quite a nice bearish reading, and we've already established quite a nice trend here on the H4. So I think we could get something, something maybe like this into New Zealand US dollar. If we can see a pullback into the 50% retracement and the 200 moving average, and then show a little bit of rejection, that would be pretty much a perfect technical entry. We've also got an option here where we could maybe see some sort of rejection on the 50 moving average and these previous lows and this previous high. Could be kind of a break and retest pattern. So we'll see. We'll keep an eye on the New Zealand US dollar. Views on AUD/NZD. I'm a bit annoyed with the Australian dollar. I was long on the Australian dollar CAD, pretty much around this area. I can't remember exactly where it was. And then we had this pullback, and I closed at break even because I wanted to just reduce portfolio. We were quite exposed to different things at that point, so I just closed it. And now in hindsight, that was a big mistake. I should have held it. So I do have a little bit of FOMO on that one, I'll be honest. But when it comes to Aussie New Zealand, I'm kind of not sure what that's doing there. I still like the idea of being a buyer, but I'm just very, very cautious of the weekly and the higher timeframes on this market. So we're coming into, we're already in a very, very high price relative to sort of the median price, or the average price, if you will. So sort of the middle of the range. Because the two economies are so correlated, this market doesn't tend to trend very well for a long period of time. So we can see obviously daily trends, H4 trends very, very nicely. However, we're not going to see, or very, very unlikely to see, this market start pulling even higher, breaking these highs and continuing all the way up. So it makes me consider actually being a seller. Now, I wouldn't say there's really a convincing reason to be a seller on an economic front, but using just the historical price action and the way or the behavior of this market, I think being a short seller does actually make some sense. So yeah, I mean, I'm not going to sell it, but I do think there's an argument to be on both sides right now. Sorry, camera's gone again. But yeah, I'm just not really a fan of being involved right now. I think if you wanted to be a buyer, you've kind of missed the opportunity. If you want to be a seller, again, maybe you're at a good point now to start building up some small short positions in anticipation we have a mean reversion. Speaking of hiking, any opinion on OPEC potential output hike? No, I've got no opinion on that. I don't trade oil, and I don't really keep up to date with the oil news. Should do, but I don't. So let's see. I mean, it's actually, it's having a bit of a rough time actually, isn't it? On the daily here. Yeah, I mean, as I said, I don't trade oil really at all. So I'm not really up to date on what's going on with the oil exports and all those types of things. But to be honest, I think just being a seller makes a lot of sense. I mean, this trend has been very aggressive to the downside. So it's had a lot of opportunities to basically sell on these peaks. So if we could see some sort of pullback or even a retracement back into these this double top, might be a good option to sell. But yeah, other than that, I don't really have any substantial value to give you, unfortunately. Actually, Shorted enjoyed that long candle. Sorry, long candle to the downside. Oh, right, on Aussie New Zealand. Very nice. Royal Trades, how you doing? EU could be setting up for sells. Yeah, I mean, that would be nice. I mean, I'm sat in these cells. I've been sat here for a while, and just sideways mess. I mean, to be fair, the trade is still valid in my view. So I took it initially here because we had quite a nice rejection off this 50% retracement and off the previous low here. So it was a very simple break and retest coming into the 200. I would take it again. But yeah, it's just, yeah, ugly. Have you checked Swiss yen? No, I've not. Are we seeing some downside on Swiss yen? Oh, wow, we are. Yeah, I've not paid any attention to this one. I was mainly looking at the pound yen, which I'll move on to shortly. But yeah, it's unfortunate. I mean, I think I might be cursed, to be honest with you. I mean, I was a short seller on Swiss yen at the start of the year. I got absolutely destroyed on that idea. Not destroyed, again, I always say it's not in terms of P&L, destroyed, like the market just completely flew the opposite way. And then around here, I was talking to you guys about it earlier, maybe over the past 1 to 2 weeks, saying that I'm actually quite happy to be a buyer. And then it does this. So I think if I ever say anything on Swiss yen, maybe just counter trade me. It might be the best idea. But no, talking about the yen, I was looking at pound yen over the weekend. I put out a story on my Instagram. I think it was a couple of days ago. It might have been Monday. And I called this entry right here. And of course, I didn't take it because it was Monday morning. It was like 7 a.m. It was way too early for me to be trading, especially ahead of London session on a Monday morning. However, in hindsight, maybe I should have taken the trade because it's just moved beautifully. Again, not great to see for me sitting on the sidelines, but there you go. Yeah, it could take me. It's fine. I've got a huge amounts of risk on the euro dollar. Yeah, well, that's what I said. At least it is positive swap. So worst case, we end up sitting through a bit of drawdown. We get paid on that, and then maybe we get stopped out. But who cares? You're very short Aussie New Zealand, so you're going for the mean reversion approach. Nice, I like it. I mean, you should be in some money right now, but yeah, I mean, as I said, I think there is potential here for downside. Maybe down towards, I'd say at least towards 1.09 ish. I wouldn't use that as a hard target, but I just think sort of the middle of this range is a reasonable target to have. And then, of course, by that time, if we do have the economics, some sort of reason to back up being short, you could extend take profits down towards 1.3. Oh, sorry, 1.03. But yeah. Switzerland had very bad retail sales prints. That's why it dipped. Still interested in shorting Swiss yen. Yeah. I mean, it benefited me very nicely. I mean, I'm in the pound Swiss, so yeah, did quite nicely off that move, but we'll see if it can be sustained. As I said, I think we could be in for a carry trade throughout sort of the rest of 2025 into 2026, but I just really need to see the trend change, and then I can look to scale in. So I've got pretty low risk. I've got like $50 on this position, so it's pretty negligible, really. Just because I'm a little bit cautious that we could come down slightly further and start retesting maybe this low from April 20, or actually, when was this? April this year. So I'm not really willing to be in a huge position because I would like to actually buy it slightly lower if possible. Will you hold EU all the way to 1.1? Probably not, no. I might leave something on the table, but I'm unlikely to hold it all the way. Maybe I mean, with trades like this, when I'm swing trading, it really depends on development. So it's not, if there was something that happened that caused the dollar to rally seriously and something that obviously hurt the euro, then yes, maybe. But the way things are right now, I don't see a reason for euro dollar to go that low, so probably not. Pound Swiss is pulling back. I mean, is it really? I mean, I wouldn't really worry about this. I mean, it was a news candle. It was very, very large, so I would fully expect price to come back towards 1.07-ish, maybe even all the way back down to 23. Either way, don't care. Again, I'm getting paid to hold, so either way, I'm making some money on the position. ISM soon? Do we have ISM soon? Let me see. I'm a little bit behind today on my news. Oh yeah, we had ADP. I forgot to talk about that. We had ADP come down quite badly. The forecast was at 50K. It came out at negative 32K. And yes, we do have manufacturing PMI coming out in about 2 minutes. So we can have a look at that together. You make me realize trading psychology is pretty much universal. I don't know. I just don't really think psychology is a huge factor. I did a video on YouTube or on my channel. It might have been last week, I think, deep diving into some psychological studies and experiments and things. There are some things that relate to traders, but overall, I think a lot of it just comes down to trusting yourself and trusting what you're doing. So if you look at a lot of what retail do, the majority of the time they're not following any sort of reasoning or logic. It's more just, oh, I think this is going to happen, so I'm going to do this, or this might happen because of this. It's not like a set strategy, or they're not trading based on economics. And obviously, if you've got, let's say, I don't know, $50, $100, $1,000 on the line, and you've got no idea what's going to happen next, you're going to go into loss aversion and you're going to just close the trade, or you're going to hold the loss and then close it early when it gets to profit. And all of these things are just, it's obvious, but retail, generally speaking, don't quite see what's actually going on for themselves, if that makes sense. You need like a outside perspective. Trading psychology is overrated. I would say, yeah, a lot of the time. You see a lot of social media posts and things. Psychology is 90% of trading. It absolutely isn't. I'd say it's maybe 10 to 20% at most, because again, it's not a huge deal. I mean, obviously it plays a role, but it's definitely not 90% of trading. PMI is up by 0.1, so not a huge deal, but it is an increase. So manufacturing showed a little bit of growth, but nothing significant. Prices paid came down, but again, not really of any significance. And then we've got new orders that's still releasing. So I don't think we're going to see a huge reaction on the dollar from that, because again, it was a very, very small change. Yeah, there you go. Pretty much nothing here. No reaction. So there you go. That's all. That's all the fun and joy gone. Pound Swiss is a solid trade idea. Let's see if we can get a break of the trend line. Yeah, that's the thing. Pound Swiss now. I think the fundamentals are there again. When I say the fundamentals, I don't mean like the edge finders reading bullish. What I mean by fundamentals, I think the central bank landscape is very good for this position. I think that a lot of the data against the pound is already priced in, and a lot of that negative sentiment is already priced in. So I think it's pretty much set to go, as long as the UK doesn't get worse and we see a continued worsening, if that makes sense. Psychology is so important. Many traders are purely on emotion psychology. Yeah, but again, that comes down just to not having a strategy and a system. So it's not psychology that's the problem, it's their work ethic that's the problem. Psychology is a what do you call it? Is a consequence of the actual problem. Oh, feeling FOMO. Yeah. I mean, you're always going to get FOMO, but then the line is, are you going to act on that FOMO, or are you going to accept that you just missed the position and you move on? It's normal to have FOMO. Everyone has FOMO. It's like, oh, I should have booked that holiday or whatever. It's just part of life. But can you explain the short trade euro dollar? Yeah. So I think the dollar has a little bit further to go to the upside. I think what we've had with the US dollar is a lot of negative sentiment throughout the year. I mean, you can see it on the daily time frame. Basically, since the start of 2025, it's just been sell dollar. There's not really been any other thing to do than sell dollars. So that was obviously driven by a couple of different factors. We had tariffs, rate cuts, we had poor data, and we also had a bit of other things going on, like basically smart money hedging against the dollar. So overall, we just didn't really have anything going in terms of dollar benefit. However, if we think about what's going on now, we've got obviously the election's over. We've got tariffs that are pretty much priced in. No one really cares about tariffs anymore. So the only real thing on the landscape of the dollar is rate cuts or the Fed. Now, the perception was the Fed was going to cut rates relatively aggressively. That's not happening. And Powell actually took a relatively hawkish stance on a rate cut, which did drive the dollar higher. I still don't think that's changed. And we might, I mean, I don't know what we're going to get. I need to see what NFP is before I start making any expectations on the next decision that the Fed makes. But yeah, I think we could get the dollar towards sort of 99.5 to 100. And then, yeah, maybe we might return to these lows. But we've also got this trend line on the weekly time frame that has been holding up really, really well. So there's a slight technical factor there. And yeah, that's it. And then obviously hand in hand, if you're if you're going long dollar, you're also expecting the euro to lose value. So essentially I'm just buying dollars by proxy of selling euro dollar. US shutdown when? The US has already shut down. They did it, actually, I'm not sure how long ago now, but it was early this morning for my time. Do you trade Nasdaq? I'll trade anything that moves really, but on a day-to-day basis, no. So when I say I trade anything, it's a bit of a, what do you call it, contradiction, because I say I trade G7s. I'm a bit of a boring trader, which is true. That's my bread and butter. But I will diversify into things like indices and commodities a bit more. If I see something that piques my interest, then I'll go and deep dive into it. Like oil, if I see something on oil, like the price action, I might go and look into it a bit more, see what's going on. Why is it like this? And what do I expect to happen next? But day to day, I'm keeping up mainly with G7 currency. So I know what's going on with those a lot more of the time in a bit more detail. Does that make sense?
What's up, James?
Oh, hey, Nick. Sorry, have I run out of time?
You have, but I also wanted to make a quick plug just for everybody hanging out here with us. I dropped that link a second ago to your to that video, the 7 mental traps that keep traders losing. Everybody here should watch that. If you are, thinking about trading psychology, what holds back traders, highly recommend. Take a second to go watch that video. James, you put in a lot of work, and that was a great video. So I enjoyed listening to myself. And highly recommend everybody who is watching to go check it out. You can also find it just on his YouTube channel. Just search him up on his channel, FX James. You can find him on YouTube. James, thanks very much for coming on, man. I gotta kick you out because I gotta go do a podcast, and I'm actually running the show solo today. So
okay,
our video editor is on vacation, so it's just me behind the scenes. So
cool.
Thanks for coming on, and thanks for sharing your analysis as always. I'll drop the link here to your channel as well in the chat.
Cool. Thank you. See you later, guys. Have a good day. Bye-bye.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.